in an unexpected development given Wood's shifting position on GM and Ford's recent difficulties. Many of us were shocked to learn that Cathie Wood's ARK Investment Management had just made an investment in GM. In this video, we'll examine why Wood's prediction is so important, what it means for the larger auto industry, and how Tesla's recent price cuts fit into the bigger picture. Before we get started, hit the like and subscribe buttons, and don't forget to turn on the notification bell. Believes that Tesla's stock could reach an astounding $3,000 by 2025. The success or failure of his new position on GM is sure to have a significant impact on the industry perception for years to come. This forecast is astounding and shows the difficulties that established automakers like GM and Ford may encounter in the years to come as they attempt to compete with more innovative and younger businesses. This forecast stands in stark contrast to other analysts' more optimistic assessments, including Morningstar's David Whitney, who just spoke with Sandy Munro and has a fair value of 68 for GM stock. Jim Farley, the CEO of Ford, acknowledged that the business has lagged behind in terms of EVs in China, where digital EV products are becoming more and more popular. Farley stated that he intended to confront the accomplishment of Henry Ford and win the world by developing an affordable car for everyone. According to Farley, it is imperative to understand that providing goods at various price points rather than only luxury goods from the 1970s will be necessary for success. Farley saw that GM's market share fell sharply from 60 to almost nothing, while Toyota, which had no market share before, shot to the top by manufacturing the cars that consumers desired. For this reason, Farley believes that taking the whole market into account rather than just a small portion of it is the winning strategy. On the other hand, Ford thought could compete in the sedan and hatchback segments market, but its operations in Europe were difficult. And it realized that its strength was in the pickup truck sector, where Maverick focuses on areas where they have a deep understanding of their customers to ensure that their innovations are well received by them. Farley acknowledged that Ford is now trailing Tesla by just 6.2% of the EV market share. But he said Ford should be pleased of its 95 electric advancements, despite what some people may not think. Ford and Farley, in the unexpected turn of events, more than 150,000 shares of General Motors GM have been acquired by Wood's ARK Invest Management for its autonomous technology and robotics fund, QU. You may have heard of RQ if you've been trading or investing. But what exactly is it? RQ is an actively managed exchange-traded fund, TUV, that is focused on disruptive innovation and is managed by ARK Invest, a reputable investment management company. Yeah. The purpose of the ETF is to expose investors to the burgeoning autonomous technology and robotics business. It makes investments in businesses engaged in the creation, manufacturing, and distribution of self-driving cars, automation, and robotics. Technologies, the businesses that RQ invests in should profit from the rising demand for autonomous technology, which includes robots, drones, and self-driving cars. These technologies have the power to completely transform a number of industries such as manufacturing, transportation, logistics, and healthcare. Drone manufacturing businesses equities are part of the ETF, driverless cars, 3D printing, and additional, the foundation of RQ's investment strategy is a combination of top-down and bottom-up research. To find the best investment opportunities, the fund's managers thoroughly investigate companies and the macroeconomic and technological trends that are expected to influence the autonomous technology and robotic markets in the future. The fund's managers are willing to take concentrated positions in companies that they believe have strong growth prospects, which can result in a high level of volatility in the fund's performance, but also offers the potential for outsized returns. RQ is known in these markets for its high conviction investment approach. All things considered, RQ presents investors with a special chance to fund the emerging markets for robotics and autonomous technology. For investors looking to gain exposure to this quickly expanding market, the ETF's focus on disruptive innovation and high conviction investment approach may make it an appealing option. This investment is noteworthy because it demonstrates that even high growth technology companies such as ARK are realizing the potential of legacy automakers and the evolving auto industry. The move by ARK is encouraging for the auto industry as a whole because it shows that traditional automakers can adapt changing landscape and remain competitive, especially in areas like electric vehicles and autonomous technologies. Uh, in addition, it highlights DM's efforts in these areas, which are being noticed and may pay off in the future. As the car industry continues to evolve, uh, it also demonstrates the possibility for partnership between legacy manufacturers and more innovative startups like Tesla. As always, investors should have an open mind and take a variety of aspects into account making investment decisions. According to Wood, Tesla's recent price reductions are not a threat to the brand. Rather, they present a challenge for rival automakers trying to keep up. Tesla's cost leadership and battery technology are the reasons behind these price reductions, and other automakers must adopt this technology in order to stay competitive and prevent losses. Tesla made a calculated strategic decision to lower prices, which could help the business in the long run. Tesla has the potential to grow its consumer base and market share, which might result in higher sales volume and better economies of scale. This might strengthen Tesla's competitive edge and make it harder for rival automakers to overtake it. At the introduction of the Model 3 is one instance of how Tesla has effectively used lower prices to obtain a competitive advantage. When Tesla released the Model 3, a basic price was substantially lower than that of prior models, making it more affordable for a larger segment of the market. It also made it possible for Tesla to draw in a sizable amount of Model 3 pre-orders, which aided the business in becoming a dominant force in the electric vehicle market. The company's decision to lower the price of the Model S earlier this year was another example of Tesla using pricing as a strategic tool. Now, some analysts expressed concern that this move could damage Tesla's brand value and profit margins over time. Supporters of the company contended that the company's cost leadership and economies of scale would allow it to maintain its margins while lowering prices. Reduced costs might also allow Tesla to increase its market share and carry on with its innovative electric vehicle development market. Although some Wall Street experts disagree with Tesla's recent pricing, Tesla's growing production volume enables it to invest more NAFRNAS war in R&D, which can further strengthen its competitive advantage and make it harder for other manufacturers to catch up. Cuts because concerned that they would eventually harm the company's profit margins and damage its brand value. Lower pricing have the potential to undermine Tesla's brand, which is based on exclusivity and luxury. Critics also note that rising supply chain or battery manufacturing costs may limit Tesla's capacity to keep cutting prices. Supporters of Tesla contend that the business will be able to maintain its margins while lowering prices due to its cost-leading battery technology and economies of scale. Cathie Wood believes that the company is in trouble because legacy automakers have been sluggish to adopt new technology, notably electric vehicles. They also think that lower prices will allow the company to increase its market share and continue to develop in the AV field. In contrast, many legacy automakers have been reluctant to invest in EVs and have continued to focus on gas-powered cars, putting them at a disadvantage in the rapidly evolving automotive industry. The automotive industry's slow adoption of new technologies is attributed to its complex and capital-intensive nature. Tesla has invested heavily in EV technology and developed high-quality, affordable electric cars that have gained popularity among consumers. Legacy automakers may be hesitant to invest in EVs due to concerns about the high cost of battery technology and the lack of charging infrastructure. But as consumer demand for EVs continues to grow, they are starting to invest more heavily in the technology. Many have announced plans to launch new electric models and phase out gas-powered cars over the coming years, though they may still have some catching up to do in terms of innovation. Legacy automakers have long-standing relationships with suppliers and dealerships, making it difficult and expensive to change their business model to incorporate new technologies. Older automakers are starting to realize that in order to remain competitive in the market, they must adopt innovative technologies. At the traditional automobile sector is being disrupted by new entrants like Tesla, Rivian, and Lucid Motors, which puts pressure on legacy manufacturers to adjust to the shifting market. In addition to facing competition from these new competitors, regulating issues also confront legacy automakers. Governments everywhere are enforcing more stringent emissions laws, which will make it more challenging for automakers to keep producing gas-powered vehicles. To stay competitive in this evolving landscape, legacy automakers will need to invest in new technologies and adapt their business models to meet the demands of consumers and regulators. This may require significant changes to the supply chain manufacturing process and marketing strategies. Buying writers are pushing for greater investment. Hospice and Evars, we appreciate you viewing our video and we hope you enjoyed it enough to give it a thumbs up and remember to subscribe to our channel.